Hi, everyone. I'm Daniel Weisfield, and I'm here with my partner, Stu Cedarleaf. We
Hi,
are
everyone.
two of the three principals of Three Lake Ventures, and we're here to introduce you to Project Rebar, which is our industrial real estate arbitrage deal in the Bay Area, which we're quite excited about. So before we get into the deal, let me just share a couple of legal disclaimers here. You should read all of this, but if I'm going to summarize it, this deal is only open to accredited investors. None of this is tax advice, investment advice, or legal advice. And this is an equity investment. There's risk, you could lose money. So I wanted to explain the genesis of Three Lake Ventures, because some of you might know us as mobile home park guys, and that's true. We are one of the top mobile home park investment companies in the country. We operate more than 50 mobile home parks in 10 states. That's our core business. We're going to keep doing that. But a few years back, Yoel and I decided we want to get into industrial real estate because it's a very attractive sector. And we started looking for a partner to do that with. And we met Stu a few years back. And we were really impressed by his expertise as a real estate professional who's done a lot, and by his ethics and his values. So that led us to partner with Stu more than a year ago. And I want to introduce Stu as our true industrial real estate expert. So Stu, you want to talk a little bit about your background?
Yeah, thanks, Daniel. So I've been working in real estate my entire career, over 15 years. I started out doing real estate consulting in Chicago for clients around the country and internationally. And then I went to work for Prologis for 5 years. And Prologis is the largest industrial landlord in the world. They do a ton of volume, both development and transactions. And it's a really, really great company with great operations and super talented people. So I learned a lot there. And I also wanted to learn mixed use development. So the last few years, I've been doing both mixed use development and industrial, which you'll see sets up well for industrial outdoor storage because a lot of these properties tend to be underutilized. And so partnered up with Daniel and Yoel with Three Lake Ventures, and I'm very excited about it.
As are we. So if you look at our track record in industrial real estate, collectively, we've done billions of dollars of transactions. A lot of that is Stu's prior experience, and he was at Prologis and former employers where he's done multi-billion-dollar and multi-million-dollar transactions. And then I also want to highlight that 4 of these example deals are Three Lake Venture deals that Yoel and I have done with Stu since we launched the venture more than a year ago. We've closed on 1 property together where we put in our own money and our family's money, and we have 3 other deals in escrow in addition to this Livermore deal. Stu, do you have anything to add?
No, I would just add that all 3 or all 4 that you see here are great examples of industrial outdoor storage, small buildings that are very functional and have lots of yard space for trucks, equipment, you name it.
Great. So that brings us to Livermore. This is a deal that, Stu, you tied up completely off market. It hasn't transacted in decades. Before we get into the details, you just share a little bit about the backstory and kind of the context of this deal and how it came about?
Sure. So I've been working in the Bay Area since 2013, and I've developed a very strong network out here. And for the last couple of years, I've had some friends of mine who are brokers hunting, if you will, for sites like this, the industrial properties that we can acquire off market. And those friends found this property and were engaged directly with the owners of the property who didn't want a big marketing process. They've owned the site for 40 years and they're all retired. They used to run, the four of them ran a rebar company here. So rebar is generally used in construction to reinforce concrete. So they would get rebar shipped to the site, they would cut it and bend it into the forms needed for various construction projects, and then they would ship it to construction sites, put it in place, and it gets covered in concrete. And they wanted to sell and move on. All four of them are retired, or at least semi-retired now. And so I came out for a tour. And prior to the tour, I was looking at it just as a pure industrial outdoor storage site, and maybe, hey, one day it gets turned into a modern logistics warehouse. But when I toured the site, I saw that on one side of it is a parking lot, and at the end of that parking lot is a train station for a commuter rail line that serves Stockton in the Central Valley of California all the way to San Jose. And across the highway, or I'm sorry, across the road from this site is a large existing residential development. And across the train tracks from this site is a very nice city park with a really cool BMX track that people come from all over the East Bay to ride bikes on. I said to myself, well, this isn't just an industrial opportunity, this is a redevelopment opportunity. And at first our plan was, let's just go to, buy this property, lease it to industrial tenants, and go to the city and tell them we'd like to redevelop it someday. As we'll show, now the city is going to do that part for us and rezone the site. In the meantime, the site is very attractive for industrial outdoor storage. You can see the numbers corresponding to the information on the side of the screen here. It has a huge yard, and for industrial outdoor storage, that's what it's all about. Is you can park trucks out here, you can store construction equipment, you can do equipment rentals, you can even run manufacturing processes on this site because it has very heavy power to the site that a lot of warehouses do not have. It has a 54,000 square foot warehouse with working heavy cranes on it, so you can move stuff on that site. There's 8,000 square feet of office buildings. There's a rail spur if you need to bring things in by rail, and it's only a half a mile from Interstate 580, which is the direct connection between the Bay Area and the Central Valley and then the rest of the United States. So we were lucky enough to tie this property up, put it under contract, our control, to our right to purchase it without it ever hitting the market. As industrial, just in the broader scheme, the Bay Area is a great market for industrial real estate. It has a monster economy. I think most studies would say it's the 17th largest economy in the world just by itself. 4 million local jobs. And then on top of that, there's also the Port of Oakland, which is the third biggest port on the West Coast after the ports of LA and Long Beach, which are really one port. So it's really the second biggest port on the West Coast. So not only do you have this massive population of talented people driving the consumer economy, you also have the supply side of the economy coming in through the port. These people, today consumers around the country expect rapid delivery, and e-commerce has been pulling a lot of demand for industrial space. And even if your site isn't e-commerce, because they're squeezing the market so much, the rising tide has lifted all boats. And so, sites that previously would have been used for outdoor storage have been bought and turned into distribution centers. There's just fewer and fewer sites like this, and there's fewer sites that have the zoning. So from a supply side, heavy industrial zoning is becoming very rare, and most of it has been built. On the flip side, you're seeing more inventory being stored in America because of supply chain disruptions that everybody's heard about. And you're seeing more manufacturing coming back to the states. In fact, you just saw the CHIPS Act get approved and enacted into law at the federal level. That's going to unlock many, many billions of dollars for domestic manufacturing. So all of these things combine to make the industrial real estate industry a really strong industry. And then you couple that with kind of the local effects in the Bay Area, and you have a very strong supply and demand imbalance that we think we can take advantage of.
Yeah, and I just want to point out, we've actually seen that already through leasing activity. So even though we haven't closed on the site yet, we've already engaged brokers to shop at the potential tenants. And the response for industrial tenants has been pretty overwhelming. You know, close to 3,000 views from potentially interested tenants, 38 inquiries from interested tenants, a bunch of tours, and we have 5 groups currently interested. So Stu, anything to add there?
Yeah, so this is, evolving real time too. I mean, not on this screen because I just found out about it today. Volvo construction equipment is touring on Friday. So big global brand with a need. They want, as much as the whole site. We've had a mix of full site users and partial site users. So we've been really pleased with the response. The volume of interested parties here really exceeds other projects that we've worked on, and I think that really speaks to the uniqueness of this property within the Bay Area. And usually you can't even market something for lease that you don't own, and we're lucky that we were able to convince the sellers to let us do that. And so we've really got a head start on our leasing process, and helps us de-risk the deal more quickly and get tenants out there.
Yeah, and Stu, you alluded to this, but just to make it crystal clear for folks, the reason we're getting so much interest is because of those supply and demand imbalances that we spoke to on this previous page, where you've got lots of folks who need a place to store trucks, store containers, do manufacturing, store construction equipment, whatever it is. And if you want to go find a 10-acre site in a great location in the Bay Area, close to a highway, already paved, already fenced, warehouse on site, heavy power, that is extremely hard to find.
Extremely rare. I mean, the heavy power really puts it over the top. I mean, there just aren't that many sites that have all of that. What you'll see from us with Three Lake Ventures is primarily sites that do have a building, so it's not purely a parking lot, because you can run a business here. You really can. You can come out here and you can run a business. You could run an entire contracting business from this site. You could run a trucking company from this site. You can run the equipment rental from this site. And that's really what we're looking for. I think that sets it apart. It is more than just a parking lot, and it stands on its own as a industrial real estate investment. On the back end of this, we could sell this property as a industrial development site and have tons of interest. We could sell this property as a leased investment that's cash flowing, as industrial outdoor storage, and have tons of interest. And that puts a really great floor under our business plan.
Exactly. So that's our basis. Well, what we're saying here is, even without residential redevelopment, this is a very compelling investment opportunity, just as an industrial deal. But there's potential icing on the cake. So let me talk through kind of the market case here a little bit, and then I'll let Stu talk through kind of the specific dynamics of the deal. So look at the Bay Area. Some people love to hate on California. It is not, the most business-friendly environment. Lots of reasons why people can complain about California. But at the end of the day, this is a $500 billion economy with 4 million jobs, and it's one of the most housing-constrained locations in the world. It is extremely hard to build any new housing here, which is why in a market like Livermore, the median single-family home price is $1.2 million. And that's not talking about a nice fancy house with a swimming pool. That's talking about a very average, middle of the road, probably starter type home. It's in a very affluent area. Median income in Livermore is $170,000. You got a lot of, engineers, tech folks living in this area. And our specific site is less than a mile from Lawrence Livermore National Laboratory, which has 8,000 tech jobs focused on, the cutting edge of technological innovation, nanotechnology, nuclear physics, stuff that I don't even understand. My dad's a physicist. I can ask him about that. So there's 8,000 tech jobs there. Those are federally funded jobs, so that's highly non-cyclical. And around those 8,000 jobs is an entire technology ecosystem with thousands of other tech jobs. So that's why we believe this site should be in residential use, not in industrial use. And the city of Livermore agrees. They have indicated they are rezoning the site in 2025 as a part of their general plan update. So Stu, you want to talk through this in a little bit more detail?
Yeah, so we covered most of this, but here's a little bit pulled back to show you all of the amenities that make this a great residential location. So we're, of course, right there in the middle with the number 1. You can see the Vasco Road train station is literally next door, with the parking lot directly adjacent to us. The baseball fields and the BMX track to the south, which going across Vasco Road, that's sidewalk, bike lanes, the whole thing, very easy to access. Already existing residential there. Yeah, go ahead.
Let me jump in here because I think in a sense you're kind of speaking real estate in a way, and I just want to make this very simple and clear for folks who aren't used to looking at real estate deals. So if you're looking at an industrial real estate site, a lot of the time, if you pull up a Google map like this, you're going to see an industrial site on the side of a highway surrounded by nothing. Or you might see an industrial site surrounded by a lot of other industrial sites, right? So what we're saying here at a very high level is this site's special. We're seeing stuff that indicates residential use and mixed use, right? We're across from a park. We're next to existing development, and we're adjacent to an existing commuter rail station. And all those things are indicators that kind of the highest and best use of this land is no longer manufacturing, but a residential use, which has a higher land value. Is that a fair summary?
That's perfect. I mean, normally these sites are surrounded by a lot more industrial use, and this one is not, and that's what sets it apart. And then on top of it, you see the number 6 down there with the arrow. Right there is Lawrence Livermore Labs with 8,000 jobs. That also is very atypical for a industrial site. So there's the train map. You can kind of see the train that's right there. That'll get you all the way to San Jose in the heart of Silicon Valley. Runs on the heavy rail through there, and there's also shuttles to BART from the site across the street, which we could tie into. BART is the main mass transit system in the Bay Area. And then these drawings are from the city of Livermore. So keeping this very simple, city of Livermore is rezoning this entire area. Our site is the site with the big X on it next to the red train station drawing there. And all 3 of these maps show it being changed from industrial to residential. And that's because they recognize this site is special too. You see the other stuff further down the street, all that pink or purple is still industrial or commercial zoning. The only one that they're changing is ours because it's right next to the train station. So this is happening. These alternatives are public. This is not something I had to ask for. It's all out there on the City of Livermore General Plan Update website. And so we have already designed a rough site plan to show a compliant design that would be a mix of apartments on the south end, where you can see the little outline there in the brown, and townhomes on the north side, where it's yellow there. And all of that is just what the Bay Area needs. We need to build density, but we don't want to go so dense that the construction costs become prohibitive. So townhomes are perfect for the Bay Area. It gives people home ownership, gives them a nice place to live, and it doesn't cost a fortune to build it. That's the sweet spot in a market that's so constrained like the Bay Area is. This is just a rough outline. Of course, there will be more guidance from the city, but we feel really good about it. And we know that the city wants it because they are already rezoning it for us without us even having to ask.
Yeah, and I just want to add, I was chatting about this deal with a friend, and he asked me, I'm not really familiar with Livermore. Is this sprawl? Is this really the type of development that we want? And I said, this is the opposite of sprawl. This is medium to high density development right next to public transit, close to jobs. This is an infill location, and it would really help the Bay Area from a social perspective to build this type of housing, and it will also help take cars off the road.
Yes, I couldn't agree more. It can't be sprawl when there's a train station right next to it.
Yeah,
exactly. And the proof is out there. I mean, the stuff across the road that I showed, KB Home, one of the biggest home builders in America, built that. So they know the market, they're interested. They've already made an offer on the site saying, hey, we'll buy it from you when it's approved for residential. TrueMark Homes, which is a regional home builder focused on California, they've said the same thing for the townhomes, and other developers have shown a lot of interest as well. So that's what makes this an arbitrage opportunity. We're basically buying for an industrial value and selling for a residential value. And here you can see it, we expect that we could generate 16 to 22% annualized returns for our investors by pursuing this arbitrage strategy. And we can de-risk it by partnering with a home builder early and taking us to the finish line. And then they know that what they're buying is what they want to build. Now, locking in the price now, of course, de-risks it, but it also takes some of the potential upside off the table because somebody isn't going to pay you full value for something they're not going to buy for 3 years.
Yeah.
So
exactly.
the other alternative is to do it ourselves. We can design.
If you don't mind, sorry to jump in here. I think you're already getting the details, and let me just explain it at a very high level here. So if you want one slide to understand this deal, it's this slide, right? This slide maps out what we see as the 3 potential scenarios for this deal. And what we're laying out is, number one, an upside scenario where we get maximum possible value for the land. We think that would deliver a 22% IRR to our investors based on our projections. And that's a scenario where we buy the land, we go through the entitlements ourselves, and once it's fully entitled, we flip it to a builder. And they're paying for something that's shovel ready or close to shovel ready. Maybe they still need to go through permitting and design, but it's fully entitled. Second scenario, again, it's a very high level, kind of our base case there would deliver a 16% IRR to our investors. And that's a scenario where, just as Stu was saying, we go to one of these home builder partners who we talked about here in the next 3 to 6 months. Once we've tied it up or once we've gone non-refundable on the deal, and we say, hey, we control this site. We know it's highly desirable for residential development. You want to partner with us, pay us an option payment, pay us some milestone payments along the way. That will give you an exclusive right to buy the site once it's developed. And we'll also give you input to the development process so that you're getting what you want, like Stu was saying. And then the third case here is downside case. Downside case is we spend $2 million out of pocket on doing environmental remediation at the site, paying lawyers and political consultants to work with the city of Livermore to get our residential approvals through, and we fail. I don't think that will happen. If I thought it would happen, I wouldn't do the deal. The city of Livermore has indicated they want a residential use here. So we think we have a very high likelihood of success, but we could be wrong. Things go wrong. We could possibly fail. And in that case, we could absorb that $2 million of pursuit costs as a sunk cost, sell the site as an industrial deal, and we'd still deliver a 9% IRR to our investors based on our projections. So Stu, I know that's a much more high-level summary. What do you have to add to that?
Nothing. I think that's great. I think that's exactly what we're trying to do here. And here you can just see it represented visually with the downside sale price, the base case, and the upside. I think the downside, the key thing is that's if it stays industrial, you know, and we sell it as a leased investment in the future. So we feel really good about that base case because the supply demand situation with industrial is still extremely strong. I mean, leasing activity in industrial has not slowed down over the past 6 months, even though there's been a lot of headline talk. Industrial demand is as strong as it's ever been. So we feel really good about the downside, in addition to pursuing the upside, which, as Daniel said, we wouldn't do it if we didn't think we could get it approved.
Yeah. Great.
So here's the quick summary.
Yeah.
You know, I'll run through this one real quick. 10-acre site, very large yard, high ceiling height, warehouse building, close to the interstate, rail spur, heavy power, great site for industrial outdoor storage. Redevelopment, city is going to rezone this property. It's a matter of when, not a matter of if. Townhomes and apartments is a great mix that we think works extremely well for this location. And there's in the back, you'll see there's a large number of comparable sales that support our underwriting. So ultimately, we're looking at a market level return on our investment purely as industrial. And then we use that return to pursue the entitlements and greatly increase our overall payouts to our investors by successfully getting this project approved and sold to residential developers. I suppose it's worth mentioning that we're not going to build this thing. We're not going to build residential. We'll sell it to somebody else and they'll go build it. So your investment is not for residential construction. It is for industrial outdoor storage and approval of a residential project.
Yeah. Let me move through here. So let's just discuss this at a very high level. I'll take a stab at it. So our total investment is $23.5 million. You know, roughly $19 million is the purchase price that's going to get paid to the sellers, and the rest is other stuff: CapEx, transaction fees, interest reserves, etc. We will get a loan for approximately $12 million. We have LOIs from multiple lenders who are discussing the deal terms with, you know, in real time this week, today, etc. And we'll be raising $11.5 million in total equity. $500,000 will come from me and Yoel and Stu and our immediate family members, my parents and my aunt. It's real skin in the game if you really believe in the deal. The remaining $11 million will come from our investors, you know, that we're raising from. And just to talk through the terms a little bit, there will be a 7% preferred annual return for investors who invest up to $500,000. I should say less than $500,000. And if you invest $500,000 or more, the preferred return will be 8%. After investors have received their preferred return, we'll split cash flow 50-50 between the investors and Three Lake Ventures as the deal sponsor. And as our financial projections here show the base case. So in our base case, which is partnering with a home builder, reducing risk and limiting some of the upside, we project a 16.6% IRR for our A1 investors. If you're investing $500,000 or more, we project a 17% IRR. In that base case, we'll be a little bit short of doubling your money in 4 years. Again, if we go to the upside case and truly maximize land value, we would more than double your money over a 4-year period. And just a little bit about the other investment features here. I should highlight this is illiquid. So if you need your money back in 6 months, you should not invest in this deal. Many of you have invested in our prior deals, so you know we really pride ourselves on investor experience. We provide really detailed investor reporting on a quarterly basis. a narrative of the properties, sometimes include pictures, as well as financial reporting, like a profit and loss statement and a balance sheet every quarter. And then annually, we provide a summarized annual report and a K1, so you can file for your taxes. And we endeavor to get that out by March 31st. We have never missed that deadline. Sometimes we beat it by a few weeks, but expect your K1 in late March. So I wanted, in the interest of time, I think we won't spend much time on these slides. We're just demonstrating that we've done homework. Come ask us if you have questions about the numbers. Here are the land comps that Stu showed, which substantiate our projections on how much this land is worth once it's entitled. There's a risk in the deal. It's an equity investment. Speak to us more if you have questions about that. Is this a good fit for you? You need to be an accredited investor. You need to be okay with risk. You need to understand it's illiquid, etc. And so with that, I'll summarize how to invest. If you're interested in next steps, we need a commitment by September 30th, or possibly sooner. It might fill up before that. It will be first come, first served until September 30th. 100% of capital will be due upfront. So what that means is if you commit $250,000, you're funding $250,000 by September 30th or shortly thereafter. And we expect to actually close on the acquisition in November. If you do want to invest, the link is here. It's 3pillarcommunities.invportal.com. Click that link and that will take you to our investor portal where you can subscribe. And if you have any questions about the deal, just email investorrelations@3pillarcommunities.com. Again, investorrelations@3pillarcommunities.com. That will go to me and Stu and the rest of our team, and we will be sure to answer your questions. So with that, I think we'll wrap this up. Stu, thank you for taking the time here on the webinar.
Thanks. I'm super excited. We're going to do great things with Three Lake Ventures. Really stoked to be partnered with Daniel and Yoel. And I'd just like to close by saying, this is my backyard. I live very close to this property. I know it really well, and I'm very excited to work with everybody on it.
Awesome. Thank you, Stu. Thank you, everyone. Get in touch if you have questions.